Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the gold market. Yes, as usual, we have prepared a report today, and today's report probably will be, or should be, I suppose, fun to read. Is just because, well, actually we have avoided any sophisticated statistics analysis that we usually apply in our fundamental view. We're just using some general text. Let's take a look at the general situation in the gold market using the common sense. That's why, although the report itself, well, slightly larger volume than usual, but it's easy to read and probably it will be interesting to you, just because we are taking a look at some specific and recent news, political events, and well, in general, just confirms our view on the gold market that in the nearest term it might be really good investment object. And as earlier we understand it, all the better. So actually we already talked about this for a year and a half probably, starting the entry with gold and the retracements even to the 1650, and we still keep our opinion that any pullback, which is currently we have the pullback, it might be used for accumulation of the physical gold. That is for a long-term investment. But in the short term, well, market still remains under pressure just because liquidity, whether we would like to or not, but is draining slightly. So Fed has accelerated with the quantitative tightening. Ministry of Finance is still selling the bonds, and well, with the acceleration actually. So the pace that it was supposed that they have to cover in the 6-8 weeks, they have covered in the 4 weeks, which is actually makes impact on the markets across the board, and well, gold is not an exception. So despite that, in the nearest time, within the 3-6 months, probably gold remains under pressure, but we still think that in the longer term perspective, this is good area to make the accumulation of the physical gold. Of course, we are talking about not marginal trading, without leverage, just buying coins, buying bullions, so keeping it at home, maybe in the bank, and anywhere in this way. So on the next week trading plan, what we could say, the first glance were correct on the suggestion that market has to start showing reaction on strong weekly support, and indeed we see the first steps of this reaction, but well, currently it looks really shy. So, and it's not clear yet whether we will get any healthy pullback at least to the 1950 area, or supposedly, as I thought on the weekly chart, it might be even stronger. But now a question stands concerning this target. It's around, maybe even we could say 1950, 1960, because here we have another level, and we could treat it as a confluence. That's the major object for a coming week. Currently on the daily chart, nothing impressive. Yes, daily trend has turned bullish, divergence is confirmed as we have the crossing of the MACD lines, but overall performance looks not very impressive, as I said. So it means that all eyes should be on the shape of these head and shoulders that have been confirmed. Yes, it was not absolutely clear and cloudless just because of the ADP report, but still market was able to get enough power to return everything back to its own and push price back to the near around 1930, 1932 and touching to the neckline. And as you understand, as we usually do, the validity of the hand shoulders is the key to understand what the performance we will get. I suppose that if hand shoulders will fail and market will drop back down below 19 even, the strong weekly support doesn't let market to drop immediately, so probably we will get some flat action with the multiple challenge of the 19 even area, trying to break it, and for a week or 2 weeks probably it could remain flat. That is in the worst scenario. If everything goes well and market will be able to show more or less significant pullback, then these hand shoulders should start to work, and we has to get this ABCD pattern supposedly target around the confluence resistance on the daily chart that we have specified. So if everything will go as well, it should be at least 1945, but maybe depending on the speed of this leg, it might be action to the XOP, which stands for around 1960, I suppose, somewhere in this area. But first is around 1945, so will be the nearest target. It means that for the bulls, it is vital to keep this hand shoulders valid, and it means that market has to stay above these lows. So if you're considering taking the long position, all this stuff, you probably could consider two levels, 1922 and 1915 approximately. This market could show retracement. So I suppose that this level seems more preferable. It's just because if hand shoulders indeed is working, market now is standing on an extension. This is the CD leg, and for the or this scenario, for the market mechanics of the hand and shoulders, it is not good to show deep retracement here. So this pullback to the 1923, it's enough reaction on the neckline, and actually end of the trading week, which was on Friday. Here's, by the way, guys, maybe we have the grabber, by the way. I just haven't checked this. Well, probably at least FX choice chart shows that we do probably, or if not, no. So it was not touched the MACD line slightly. That's, by the way, the pattern that we could keep an eye on Monday, by the way. So maybe we'll get the grabber here, as all the better. And in fact, here we have a kind of the bread and butter trade. So we have the thrust, 30% pullback. And that might be kind of the momentum trade, and this level definitely is worth it to consider for a possible upper continuation, at least at the best scenario. And as bullish pattern has to work, this retracement should be enough. If still market will keep going lower, well, in this case we'll start watching for 1915. If you're really very careful with the entry, you could just wait for maybe deeper retracement, which lets you to place near standing stop. But in this case, you could miss the entry if market start the operation right from here. Maybe you could split the position. But anyway, that is two levels to keep an eye on. This, of course, will be something in the validation level, but if market will break 1915 and erase this rally on Friday, this already will become negative sign. And in this case, I think that it's not necessary to just use these ultimate levels, 1902. This will be already final confirmation. I think that market, if everything will go well, market has to stay above this area. Among the positive signs, I could mention here that take a look at all ADP collapse has been erased. This is a good sign for the market. So until the hand shoulders is valid, we are not considering taking any short positions. So that's what we have currently. So all eyes on this hand and shoulders and retracement on Monday, and see what the performance market will show around 1923 area.